And sticking with retail here, another interesting report on the subject comes from Gallup's daily tracking poll of U.S. consumer spending. This is a self-reported poll. That means consumers tell Gallup how much they're spending each day. So if you take a look at the chart comparing this summer to last summer, you'll see that back-to-school sales have not ticked up the way they did last year. It's a trend that may be troubling to retailers that rely heavily on back-to-school purchases like office supply giant Staples, for example. Stephen Chick is an analyst with FBR Capital Markets, and according to data compiled by Bloomberg, he is the analyst whose recommendations on Staples produced the best total returns over the past year, and he's with me here in the studio right now. So, Steve, obviously the retail picture is looking a little bit bleak right now, again, on the sort of broader level. So, I mean, what are you seeing when you look at the retail sales numbers today, when you hear those Gallup numbers? And also, contrasting with that is the confidence number from the University of Michigan, which actually held up relatively well today.
Mm-hmm. Yeah, I mean, what we've seen when we go through the data is, as you would expect, you know, some of the more cyclical categories are softening, downshifting, if you will, you know, against pretty easy comparisons. And some of the more defensive categories are doing well. Aftermarket auto parts, for instance, actually accelerated in the numbers that were reported today. Office supply was down. Home furnishings decelerated, and I focus on the year-over-year trends. So it's a downshift. I mean, we're not revisiting the very negative levels we saw back in the late 2008, early 2009 timeframe. It's just not as good as we would have told you or we had expected 6 months ago.
I mean, it's interesting when you look at the year-over-year, because as you say, last year was lousy. So you would think it would be relatively easy for us to see at least a small year-over-year gain. If you back out the autos there, you saw a decline. I mean, when you look at the various retailers you cover, what's driving consumers, or not driving them as the case may be, to go into stores?
Well, it's, you know, we're seeing a lot of, you know, shopping around events and promotions, and on non-promotional days, weekdays, and if there's not an event that's bringing them into the store, you don't see the traffic. And so even when companies generate sales, they're having to be more active in getting them. And so far into the back-to-school season, you know, Office Depot specifically, what reported a week or two ago, reported that they would be more heavily focused on broadcast media in getting traffic for the back-to-school season.
And how about Staples? I mean, you have an underperform on the stock, and you point out that, you know, the majority of the company's business is not actually retail. It's actually direct to businesses. But even so, that 39% is not a small chunk. That's what comes from retail.
Yeah, it's 39% of sales, and it's a high-margin business for them. And, you know, Staples is a very good company and a good balance sheet and good cash flows. The comparisons are tough. A third of their business is technology. A third of the retail business. 10% of their sales are PCs. And in the last couple of weeks, in fact, we've gotten some data that indicates that notebooks and laptops have been decelerating. And our semiconductor analysts, along with some of the chip information, echoes that. And that's a concern.
So, for example, if you're taking your kids to buy school supplies, you're buying the notebooks and pencils that they need, perhaps, but you're not going to upgrade the computer that's a few years old.
Well, theoretically, I mean, you know, I'm not sure why. Well, the sales were actually very good of these products a year ago. In fact, starting right in the second quarter of a year ago, PC same-store sales were strong. Might be a little bit of a comparison. You know, we got Windows 7 launched. That was actually not until October of a year ago. We start to face that forward-looking here. So it might just be a bit of the comparison.
All right, Steve, unfortunately we're out of time, but obviously retail very interesting right now. Steve Chick with FBR Capital Markets. We'll be right back.